Hey, what's going on, everyone? So I want to do another video and kind of show you guys the problem with today. Okay, so even though, yes, the NASDAQ 100, the futures, as some people on stock twits and on Twitter would say, futes are ripping, they're up 75 points. Here's the problem with that. Okay, when you really look at it, you have to take a step back, look at the bigger overall macro picture. Are some stocks up today? Yes. Is Shopify up $14? Yes. Tesla up 12, Facebook up 5, Nvidia up 4, AMD up 4, Amazon, pretty much flat, Microsoft a little bit of a recovery. Yeah, okay, they are, but you have to look at the bigger picture. Yesterday we had a pretty significant selling day. If we just kind of look from the highs to the low here, 389 all the way down to a low of 376. I mean, that's not really good. When we start losing levels of support that are pretty significant, the 5, the 10, we got rejected at the 20-day moving average. We fell into the lower, beneath the lower linear regression channel 50. I mean, we pushed through yesterday the 100, the 100 EMA and came all the way down almost to the 150 here. So if we kind of look at where we're at today, yeah, we had a little bit of a down open. Futures were down pretty significantly to start the pre-market. So we did end up here into this 150 SMA, right? And then we got this nice little bit of bounce. Here's the problem, okay? Here's the big problem with a day like today. This is where a lot of people can start to get trapped. Okay, so you can see a day like today, you can be like, man, well, we really didn't lose this whole bottom area here. We didn't confirm to the downside. We know that we have this wick down here at 369. It's going to act as a little bit of support before we get down here to the 200, right? Which, in my opinion, I still think that the NASDAQ 100 sees 365. It just would make all the sense in the world for these guys to see 365. So if we really take a look at it here, there's not a lot of room. So what are we really going to do? Unless you're a scalper, okay, unless you're an experienced scalper, meaning that you've been doing this for years, you have the screen time, you've got good risk management, you understand position sizing. If you don't know any of those three things that I just talked about, if you don't know what good risk management is, if you don't know how to position size yourself correctly in a market like this where it's very, very choppy and very, very volatile, and if you don't understand supply and demand, if you don't understand those three things, you should not be scalping, especially in a market like this. However, the problem is that a lot of retail traders, we tend to get saved by the overall market. So yeah, we're looking at a specific area, it looks good, and yeah, we might go down in the position a little bit, then the overall market kind of saves our position, whether that be long or whether that be short, meaning that we don't have to have necessarily the most perfect entry if the market is trending bull. Okay, the market's going to kind of save us and continue to go higher. We don't have to have the most perfect entry if the market is trending bear, meaning that we could essentially get in at a flush point, let it bounce a little bit, and then the overall market's going to correct us. The problem with a market like that we're in right now is we're in a tight trading range, 369 all the way up here to 400. It's a bit of a spready range, but you can see every time we're at the top of the range, we come back down. Every time we're at the bottom of the range, we come back to the middle, we kind of consolidate, we break down, we go back up to the top, we kind of consolidate, we break back down, we try to push higher, we come back, we consolidate. The point is that if we look at the chart going back to November, we have not moved anywhere. We have not made higher highs. We have not made lower lows. The last lower low that we made was right here on the 10th of January, which we are also testing and tested today. So until we start to lose 369 and come down to the 200-day moving average and lose the 200-day moving average, technically from a big perspective, if I pull up the weekly chart here, technically on a structure level, we are still trending bull. Okay, this is still a bull market. Yes, there's some pain. Yes, a lot of stocks have pulled back. I understand that. But structure has not been broken. Now, if you see this red line here, this 369, we start to lose 369. Now we're having a different conversation. We're having a different conversation down below here, and we could expect 360, 365. That would be the 50-day moving average. That would also be the linear regression channel 50. Structure would be broken. We could be talking about bear market scenario. So getting off of the subject, but if we talk about, you know, what the problem is with a day like today is that the value is to the downside, especially if you're someone who's trading options. If you're trading options, there's just nothing here for you. There's nothing unless you bought right off this 150-day moving average right at the bell, or right, you know, as soon as you could get it as close to, and kind of just rode through these ups and downs that we've had so far in today's market. You know, there's no room to put on a trade. Even if you're scalping options, it's just so tough because the follow through is not there. So if we just kind of take a look at what I mean, let's take a look at Tesla, right? Tesla looks good, but the value is to the downside. Okay. Tesla flush below 1013 has room to 981. Tesla confirmed today's highs of 1050 has room to 1052, and then 1057, and then 1062. You see what I'm saying? There's going to be so much chop. There's no value here. There's just no value. We're coming into supply. Last thing that's going to, the first thing that's going to happen is you're going to get long here because you think the day is, you know, just going to finish green. And then we're going to get stuffed into supply. This is going to pull back on you so fast, you're going to be down on your position. Look at Shopify here. Shopify just been fading off those highs of 1,700 all the way down to lows of, you know, 1,000. We're currently at 1,073 right now. I mean, Shopify confirmed these lows to the downside. Even if it was to go back up to the top side, 1086 is only going to have room to 1,100. You know, there's not much room. The pressure is to the downside. If we take a look at Facebook here, Facebook been trading in this range. We're down at the lower Bollinger Band here. You can see we've held this level 1, 2, 3, 4 times here. Down to the bottom of this range here, what did we do? We bounced right back up. However, the problem with going long in something like Facebook is look at the levels of supply. Look at all of the levels of supply on the chart. We have the 10, the 20, the 50, the Bollinger Band, the 100, the 150. I mean, it's not saying that this can't just plow through and come back up to 340, 341, but you're going to experience ups and downs, and it's going to be choppy and choppy and choppy and choppy, and you're going to get shaken out of your position. There's just no room in the trade. The room is to the downside, you know, and I'm not a bear and I'm not a bull. I try to look for the biggest measured potential. Now, whether that's going long, let's ride, baby. Whether that's going short, let's do the thing. Okay. But you know, if we take a look at AMD is trading well below the 50-day moving average. We're trading below the 20-day moving average. We're coming back up into the 10-day moving average. You know, we still would need to confirm that level. We would still need to close over $139. And still, once we close over 139, still only have room to 139.63 before we have to get a daily close over that, before we can even start to attempt to test the 50-day moving average. Look at where we closed at yesterday on AMD. We closed at a price of 131.78. The low price of the day today was 131.43. You can imagine that the room is to the downside. We start confirming this 131 area, we have room down to 128. If we confirm to the top side, we're going to get bump our heads 50 cents higher, then bump our heads another 10 cents higher, and then bump our heads another $1 after that. There's just no room. This is just, you know, a classic dead cat bounce, guys. I mean, unless you're experienced, unless you have screen time, how to deal with this. Look at NVIDIA. Been selling off since $346. We did hit that on November the 22nd. Ever since then, we've been consistently making lower highs here on NVIDIA. NVIDIA is down here at the 100 simple moving average. We did lose this linear regression channel here, did give a nice bounce. So guys, what is the theme here? When stocks come into demand, generally they tend to find some support if they're respecting that demand zone. Okay, if that demand zone is significant, we will respect it. Look at the red line on the chart, guys. This is a 50-day moving average here. NVIDIA respects this line, respects the 50-day moving average. And what happens when it lost the 50-day moving average, guys? We came down to the next significant level that the stock price is going to respect, and that's going to be this 100 simple moving average here. So could we get a little bit of a bounce? Of course. Could we get a little bit of a bounce? Probably to 275, 276, 278? Absolutely. But on the bigger picture of things, that's still putting in a lower high. Nvidia would really need to start closing over 287. It would really need to start closing over 300. Needs to reclaim the 50-day moving average. The value is to the downside, guys. The value's to the downside. If Nvidia starts taking out this 100 simple moving average, it starts making a test for this 256, watch out. This has room all the way down to 239. If we're talking about going long, could you go long and bounced off the 100 here? Of course you can, but you just have to understand that this is not just going to shoot back up to 300. It's not just going to go back to all-time highs. You're going to come up here, you're going to bounce back down. You're going to come here, you're going to bounce back down. You're going to come here, you're going to bounce back down. I hope that makes sense, guys. This is a perfect time where, a lot of traders can really start to chop yourselves up. You guys can really take a trade here, take a small loss, take a trade here, take a bigger loss, take a trade here, get faked out. And the next thing you know, you're sitting back looking a week later, down 60, 70, 80% of your total account size. Guys, wait for the bigger picture to develop. The bigger picture is still to the downside until we start showing that these bounces, these levels can hold, meaning that when we reclaim the 5-day moving average and the 10-day moving average, we've got to hold it and we've got to get confirmation the next day. We've got to start working our way back up towards the 50-day moving average until these stocks and the triple Qs start reclaiming the 50-day moving average. This is a continue to sell the pop environment. As much as it pains me to say that, because everybody loves when stocks go higher, including myself, this is still a fade the green day environment. So if you are managing long positions here, be very, very careful. Very, very careful about just averaging down because we have a red day. You could keep averaging down and buying the dip, and the dip keeps on dipping. We need to get some sort of clarity, some sort of bottom here. And, we have not got it yet. We still, if you look at the daily chart here, we're floating in the middle of nowhere here. Okay. We're floating in between the previous low wick in this whole formation, and we're floating in between the 5-day moving average. So we're below the 5-day moving average, but we're above the 100. Guys, there's not a lot of room here. Stay patient. If it has to, if this is market's going to do this for a week, 2 weeks, 3 weeks, just look for the bigger macro trades, I'm not saying to get in and start holding everything, but just look for the bigger trade to develop. If the triple Q start losing the bottom of this formation, 373, we know we have room down to 369. That's your opportunity for a trade. For the long side, we're going to need to close over the 5-day moving average, and our opportunity is going to be back up to the 10-day. So you're going to have about 3 to 4 points there worth of room. Until we get back above or we start cracking below, there's no trade here, guys. It's just, this is a range bound trade that's going nowhere. I hope that makes sense, guys. If you want to join my Discord, that link is down in the description box below. Also, leave me a thumbs up, subscribe to my channel, and drop me a comment. And I will see you guys all on the next video.